one of the features on the platform that helps analyze reactions after earnings. Here in the screener, we have two useful metrics: earnings gap and earnings shock. An earnings gap measures how much a stock moves at the open immediately after an earnings report. For example, here we can see AMBR, which is showing a very large earnings gap of about 64%. That means the stock opened dramatically higher after reporting its results. Another example is SLAB, which shows a gap of roughly 42%, also indicating a strong reaction from investors following the earnings release. But the initial gap is only part of the story. This is where earnings shock becomes useful. Earnings shock measures how the stock continues to move in the days after the earnings announcement. So if a stock gaps higher on the earnings day and continues to move up over the next sessions, that suggests positive follow-through momentum. By combining earnings gap and earnings shock, traders can quickly identify stocks that not only reacted strongly to earnings, but also continued to trend afterward. These types of setups are often associated with what traders call post-earnings momentum. And that's a quick look at today's market setup. Thanks for watching, and see you in the next market update.